So,
Mm.
but yeah, I wanted to talk to you a bit. Basically, like a lot of the people in my group kind of have a very similar problem where it's like what we've talked about before is like everybody wants to make everything much more complicated than it is. And
Yeah.
that's what it seems like. So it was like talking to you the other week was cool, and I was like, it'd be really cool to have you to talk to if you have the time. So I'm glad that you took the time, came in, much appreciated. Just want to start out with what first talking about your journey that led you to trading. So I know you went through a couple interesting things. Bear Stearns being one of those things. You can get into that in a bit,
Sure.
but how did you end up from there, basically college into trading?
Yeah. I mean, I wasn't going on the trading path, or I was a baseball player, and then it just kind of all suddenly ended for me. In a bad car accident, and that was kind of the end. And um, so naturally, I had this competitive juice is still there. Like, what do I do with this? So then, started work, and even to start, I started as a public accountant auditing hedge funds, and just knew this ain't gonna last, man. I'm not. This is not me. But okay, I'll just do it for a bit, and then figure out what the next move is, and then yeah, I mean, it was really started probably in the off season, for auditing hedge funds. It was you get your busy season, probably like December to May,
Mm.
and then it's all pretty much done from then on. Like in between those months until the next busy season, you're sitting around like, if you're low on the totem pole, which I was 22. It's like, well, what can I do? And I would go around asking people, you have anything for me? I can't sit here all day
Yeah.
and just wait until we have to go home. So I was just, get on the internet, bought some books, and just like basically studied and read, and just kind of immersed myself in that. And then that was like summer '07 where I was really into it. And that's when the housing started to crack a bit. And that's when, I think around when Kramer had that famous video
Yeah.
where they're nuts, they're nuts. I think it was all around that time.
Yeah.
And then,
So from
pick
there, when how did you get from auditing to working at Bear Stearns?
well, it was at that point, probably in that summer, I knew I was leaving. Now I had my friend, one of my best friend growing up, worked at Bear, and I called him and said, "Do you have anything? I'll come in and do whatever. I'll pay me anything you want." And he says, "Yeah, actually, we have someone on our opening on our team." I said, "Okay, let's go. I'll come in. I'll do an interview." And did that, got it, and that was it. Moved to the city. At that point, I wasn't living in the city. I was living in New Jersey at my parents' house still. So that commute over was great. And then I just moved into New York, and West Side, and it was great. And then actually pretty quickly after that, I thought, no, this isn't it either. Fuck.
Yeah.
Like, all right, because at that point it was, I had been researching and following a lot of traders, like from Michael Covel's trend following book, and then just like following John Henry, Jerry Parker, Dunn, and a bunch of other CTA, like trend following guys, just tracking their monthly performance. And then as I was around the markets more, I could kind of understand where it was coming, like how they were generating it all. And because reading books and reading, like historical examples of, oh, they did well in this and that period is like fine, but I don't know, real time really helped me.
Yeah.
So yeah, I guess like fast forward, I kind of put this on the back burner while I was working at Bear, because it was like 15 16-hour days plus. It was crazy. And then when it started to go south in February, March, for Bear. That's when Bear was sold
Yeah.
to JP Morgan, and that was when I saw, that was like the first light bulb. Like, okay, one, this is not going to happen to me. I'm
Mhm.
not going down this path. I'm not going to become like what I thought was, I was gonna, yeah, I did work with a lot of smart people, but they all are smart until they get really, really dumb and
Yeah.
don't cut the loss, and it's just like, well, man, if you're really gonna be good, you got to do this thing.
Yeah.
And I said, you're not doing this thing. So, okay, okay, so this is not gonna happen to me. And two, all right, I think I understand kind of how these trend guys are making money. And oh man, I think this is really for me. This makes sense. I get it. Okay, I can grasp it. And yeah, I think I'd like to do this too. I'd like to maybe go off my own too. Now, how the hell do I do that? So
Yeah.
that was like, from like March through the end of the year where I kind of figured all that out, was doing all the work and getting into it. So, and then, yeah, and then that second light bulb was when Lehman went down. And then, obviously trend traders were crushing it, and it was just their kind of bright, or their most recent, bright and shining moment. And
Yeah.
that was just like, okay, I can do this. Like it was, that was like the confidence, one of the, the second big confidence boost I had, to where I could do it. And then as fate would have it, got laid off, because they were, JP Morgan was going through major layoffs, and we were, was like 23 years old.
Yeah.
And I thought, oh, thank you. Now I'm going to do it. Now, I don't know if I would leave the job because, well, making pretty good money at that age, working at a big bank. Um, this was just a kick in the ass to go do it.
Yeah.
And now I was forced to go do it. So, um, so yeah, then I
Wonderful how
started
that
to just,
happens.
yeah, I don't know. Can't explain it, but
Mhm.
something might be going on with it all.
Yeah.
So, universe or whatever, well, whatever it is.
Yeah.
But it was easy. It was easy to make that leap now. So, yeah, just started getting into Excel, starting coding some stuff, and just started building kind of a strategy, and then kind of trading it in, paper, just real time, just to get the mechanics and get the reps and the habits down of, this is what it feels like to buy crude or buy this stock, like after it went down, now back at the highs, like, oh man. And then you get the feel, you get the appreciation of, oh, this is why proper investing is difficult.
Yes. Yeah.
Because of it's just so emotionally, like, I'm buying this now
Yeah.
after it's rallied 40%.
Yeah.
Really? Like, oh my God. Yeah, yes.
Yeah.
Hard. So it was good to learn that, very young. Um, and to be, I probably, if a thing I wish I had to maybe change that would have increased my learning curve was to maybe have like a mentor, like a person who was actually doing it or had done it for a while, because then it's like having a good coach. You can just, they can bring the best out of you, teach you more things quicker.
Yeah.
So yeah, my learning curve was probably a little slower than it had to be, but hey, I was still young enough. It still didn't matter too much.
Yeah, I mean that's a good point. It's really it's interesting at the beginning of it. You're talking about a couple things, but I'll talk about the one thing first. You brought up the stops, and right now is like a very interesting time because of like Melvin Capital. Like I just read today that they're down again in May and they've lost like another 6 billion, and it's like where the fuck are your stops? Like do you guys not have stops? Or are you just gonna
What,
hold on to all these positions forever?
what are they down now?
I
I
don't
wonder.
know. I just like I literally read it was right before I got on with you. I literally like saw the headline, started reading through it a little bit, and then got on with you. But it's something about losing another 6 billion,
Holy
and it's
shit.
like it's like when in the world, that for us, like it's like you cut the loss. That's it. Like you're done. Like there's
Yeah,
no way
yeah,
something would wipe out, your fund will never be wiped out 50% from one trade. It'll never
yeah,
happen. Maybe
yeah.
1%, like, but
I,
50% sounds insane.
and I do think, to side tangent here, um, when talking about like fundamental traders, because obviously Melvin is fundamental, at least they say they are. And, I'm technical
Mm-hmm.
and I'm only looking at price. They're looking at a whole other batch of information to decide on what markets or, what stocks in their case to invest in. And I think that's like the big difference between both of us is really just like how we select a portfolio. But I think if you're going to be a proper investor, you need to have all the other things in line. Like you need to obviously trade with the trend. No one wins without a trend. No one makes money without a trend. And you need to, in order to get those big winners, you have to, either take big positions, which we usually don't, but they might be more concentrated, like as Drunken Miller talks about all the time. But then you need to hold your winners. And
Yeah.
then, but the big thing is you got to cut your losers. And I think like, no matter how you arrive at shorting GameStop, going long GameStop, you need to get that correct. Otherwise, you're eventually going to die. And it doesn't matter whether you call yourself a fundamental trader or technical or macro, whatever the hell else name you want to call yourself. You need to do those things. So I think they're not doing something.
Yeah.
I don't know. It doesn't, okay, you're fundamental, great, but you're not a risk manager if you're losing 50% a month. Like, I don't understand what they
That
could be doing,
happens.
but
That's
yeah.
it's really interesting because it's like that's the one thing. If you look at all great traders, it's the one thing they all have in common. Like I know a guy who trades and actually makes money just with moon patterns. Like just the weirdest things I could ever think of, but they're making money. So whatever. To me, I don't care. But
Yeah.
once again, what they all have in common is risk control. Like if
Yeah.
you go through Market Wizards or anything, it's risk control of some sort. Throughout the entire book, throughout every trader, throughout everything. That's the one thing everybody has in common. So when I see things like that, I mean, it's why the public has a misconception that that's trading. Like you put everything into one thing, you hope it really works out, and when it doesn't, oh shit, like it's gambling, but it's not.
Yeah.
For us, it's very different. It's sorry, small bets, small losses. Like when you do it that way, not to mention you're going to stay alive. And that's a really important part that a lot of people miss in trading. It's not that only staying alive is good for your portfolio, but mentally you're going to give yourself the time to learn. If you're trading too big and you're blowing yourself up, you're not going to have the time to learn how to trade. So yeah, it's
Yeah.
it's it's really interesting. And another thing you brought up, which was you played baseball and
Mm.
you had an accident. So
Yeah.
you we haven't talked about this, but I used to be a professional BMX rider, and I've gotten
Oh,
hurt.
wow.
Yeah, a lot of times. And but it's interesting that everybody I talk to kind of has that sort of story. Like Pat, I talked to Patrick. He used to be a football player. Like you could basically go across the line and you find a lot of people had this either something competitive about them when they were younger, and then they end up in trading as they get older. Do you find
Yeah.
any because I see these all day long, but anything that you would say, hey, like I learned this when I played baseball that transfers into trading all these years later?
I really think it's deep. For me, it's deep. Then it's not something I learned. I just always had this rage against losing. I couldn't even take it. Um, I'd get so mad and so upset over the dumbest things, And we do, I don't think my wife can hear me, but she can. She's gonna be rolling her eyes at this one. Um, I'm fantasy hockey. I'm in a league with Jerry Parker and a bunch of other people. We invited my dad into the league this year, and he's not as competitive as we are, but and he won the league. But that's
Of
another
course.
that's another story. Um, but just the dumbest thing, and like our grand prize is like $850. The winner, right? winner gets like $850. And, it's like a 5-month season, and we're doing a lot of, a lot of work on this. We got spreadsheets, we're tracking average player stats and stuff like this. And, you know, and like, we got our funds and we got our, our businesses, and, there's like, there's millions of dollars being managed and stuff.
Yeah.
And it's just like, $800 is a normal, 15-minute swing or something,
Yeah.
in the markets or something. But, and my wife's just like, what is with you people? Like, this is nothing. This is so unimportant. I'm like, no, this is pride. This is not about the money. You understand me? This is the most important thing in the world. Yeah, she's rolling her eyes right now.
Nice.
I think that's just where I think it's just innate.
Yeah.
I've always had it. I've always had it since I was young. I've always flocked towards the, like dynasty type of teams. Like, I was a Giants fan. I grew up in Jersey, so Giants, Yankees, and always loved. The Yankees in the '90s were great, and the Giants are pretty good too. But the 49ers, like I was big into the 49ers, Nebraska football, where they just killed people,
Yeah.
blew people out. And, like, I love all that. Like, because I also didn't love like talking too much. I didn't like to discuss like who's the better, like I'm so much better, there is no discussion, type of thing. That's what I liked. So it also hit that part of my personality as well. So yeah, I don't, I can't, I don't have anything to really, there's no advice I have like, I don't,
No, that's
I think you
perfect.
have it or you don't. I don't know. It
No,
might be
that's
easy.
perfect. That's the one thing that I say too, like if somebody was to ask me like, what changed, of you in the last, 40 years, I'd say nothing, or 35 years, I'd say nothing. I was the exact same person I was at like as far back as I can remember, maybe five
Yes.
to
Yes.
today. And so I
Yeah.
don't think that, yeah, it's important to understand that that's kind of the personality type that does this. And sometimes because there's a thing of also just understanding you're not the right personality type for something. And a lot
Mhm.
of people don't like to think that way because we want to say everybody's possible, everybody can do everything. But sometimes you're just not the right personality type for something. I think that also leads to like the trend following mentality, because you also understand that to win, you have to, like, once you backtest, you realize to win you have to be able to lose, and you have to be able to do these
Yeah.
things that just are not natural. And
Hmm.
the only type of person who will really like do that is somebody who's that competitive to say like, I don't care like how many times I lose as long as my upside is this, like, that's what
Yeah.
that's what drives you. So that's, I think that was spot on. Good.
Yeah. Yeah. I think it's the same. It's the same for the fundamental traders too. Like,
Mm,
hey, you want to win? Sorry that you don't just get to pick stocks and they get to work day one. They
yeah.
fluctuate and they go against you sometimes, and you're going to have to, put your fundamental view aside sometimes, like GameStop, like
Yes.
AMC, like Tesla, and I think Tesla is an incredible example. This
Yes.
because it wasn't just a um, this like parabolic short-term squeeze. It
Mm,
was a long-term move, and it's still obviously playing out. But yeah, it was a position that we had in, and it was just like kind of funny.
yeah.
Like, I don't know.
Everybody hates it,
It almost
everybody's shorted, everybody thinks it's terrible, and it just continues to go higher.
yeah, it was
Love
just
it.
it felt like American politics recently. Like everyone is split down the middle on this. You love it or you hate it, you believe it or you don't. But the trend is the trend, and hey,
Yeah.
that's all that really matters at the end of the day. Hate
They
to
only
break
get
it to
paid
you.
by price. That's it.
Sure. So like however you arrived here, however you arrived at adding Tesla into your portfolio, um, it doesn't matter. But
Mm,
now that it's here, here's how you have to play it if
yeah.
you want to make anything. And it was just too good of a trend to say, no, we don't believe this. I don't know. We're worried. Because we, we have our small position in, like if it
Yeah.
goes against us and let's say it is a fraud. Um, One, generally frauds take time to play out,
Yes.
or um, and let's say it acted, it crashed one Monday morning over the weekend. They found that, whatever, that it was going to be like 20% of its value. Well, the way we do it, we have small positions, small position sizes on a lot of different things. So any one thing is really not going to make or break us. And it's the same thing
Yes.
on the flip side too. On the winning side, we need a bunch of markets to do well, some themes to play out, to do well. We're not picking this one and putting a lot in it. We don't play it that way. So, um, but still, we have our stop losses, we got our small position sizes. So if it went south, okay, you know,
Well,
live and learn.
well, the other part of it too is, you told me you and Jerry both are people who do a lot of individual stocks, and
Yeah.
so CTA wise, that's a newer thing that's kind of happening in the last probably 10 years at the most, probably five even, So I was wondering, tell us a little bit about that. How did you guys kind of run into, hey, we need to have some more individual stocks? Was it a performance thing based on the performance, or was it something based on diversification?
More towards the second one we saw. Well, we both came at it at different times. He came at it earlier, and when we started to become friendly, we, get coffees in the West Village in New York, and is early in the morning. And I remember telling him one time, I said, you know, we got to be trading single names. It doesn't make any sense. And in regards to diversification, the way we typically build our portfolios is not on a fundamental view, but like on a statistics and correlation, covariance analysis, uh, using that work to design it and populate it. So I'm like, looking at all these things, and at that point, I was growing my portfolio, so I wasn't just trading the S&P and say Europe
Yeah.
indexes, because at that point I was trading the index futures. And then I was like, okay, I got some more capital now. All right, I'm going to expand. So I was growing my portfolio bit by bit as AUM grew over time. So I was like, okay, I'm ready for the next batch. And then I saw, I was like, hmm, all these are kind of the same, even though one's here, one's there, one's there, one's there. This isn't good. This isn't good, because now I got a 20% position in one thing, and they all do the same thing on one day. And especially when they go against me,
Yes.
they all go against me on the same day at the same time. So I said, no, 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 no. What do I do here? I'm just basically using like scientific method. Like, okay, what if I randomly chose, um, let's do a little filter. Let's do, market cap has to be 5 billion, average volume's got to be X million shares a day or something, and price has to be this. So it's got to be like a legit company.
Mhm.
It's got to be legit. It's got to have at least like 2 years, 3 years of data, things like that. And then I say, what if I chose them randomly and then just held them for a while, and then like every 3 years or 2 years, just choose another one out of a hat, put the same ones in a hat, and plus other ones, and then like, what if I do the same thing? And the same thing, just trade them using the same rules that I have, and wouldn't you know it, it did pretty well.
Interesting.
And then I thought, okay, let's see if we could do other ways, and then let's see if we can optimize for how different they are. Because randomly you can pick a lot of similar stuff. It's just,
Yeah.
your bad luck if you choose randomly and they're all the same. But um, so all right, maybe let's do like a few here from this sector, a few there, a few there, a few there. That way you can, just get some differences. You don't get bunches at the top of the indexes that are, can be, a lot of institutional money flowing them around, and they too, even though they're in different sectors, can become correlated, like the fangs and stuff like that.
Oh yeah. Yeah.
So there's like different companies, but they all move the same because they're all in it. I have a heavy weighting in these indexes. So
Yes.
all right, we got to get away from that. Um, and then yeah, that was the first day that Jerry was like, let's do it. Let's get to work on this. Let's build some spreadsheets. Let's do something. So yeah, that was when, and then and that's how recently we've gotten moves like Zoom and Tesla and some good shorts and like General Electric for like a year or two. Is like these like things that when you look at the indexes, if you took the names off of them and showed the indexes, everyone would be able to tell because everyone's seen them so often.
Yeah.
I know that's the S&P, but then you throw like GE up there, you throw some new ones, I don't know what other like newer names like Yeti, Spotify. I don't know,
Yeah.
just some newer IPOs recently. They don't move like the indexes, which is great. And some of the old
Especially when they're
names don't.
outside of the ETFs. Yeah.
Right, right. And some of the old names do too, like right now, like energy and high energy, uh, energy names and like materials and industrials because they've been so beaten down,
Yeah.
they're not reflected in the indexes. So,
Yeah, they're like
so that was just like
5% on
a
the S&P now. The energy is like 5% of the S&P. So yeah,
yeah,
it's
yeah.
completely
So
unrelated.
it was like a funny problem because our problem in futures is that there's not enough of them, and a
Hmm.
problem in stocks is just too many of them. How do we choose them? So eventually you get to a point where it's like this is good enough, and if we find something better, fine, but this seems to be good enough for now, and we'll roll with this process, and we'll kick some out every once in a while when they get too correlated. We'll add some new ones in, and that's it. But we'll anticipate that being like permanent changes. We're
Hmm.
not just gonna become like fundamentalists and start trying to pick stocks. We're not doing that. We're not picking them
Yeah.
because we think they're going to do well. We're picking them because they enhance the recipe. They make it just a better blend of different things. So that's what we're trying to do.
Interesting.
Yeah, it's worked. It's worked well,
So what's
better than the
your
indexes.
commodity exposure now with all that going on? I remember a lot of like people when I would research all the trend guys, it was like a 60-40, 70-30. So it was like a lot of commodities and then less equities, less financials. What are you running now? Like what would just a general idea?
Well, it's about half, like maybe a little more than half of our portfolio is in commodities, which has worked out well for us recently. Let's say over the last like 10 months, commodities broke out like last Q3 last year
Yeah.
into Q4, and it's just been just a hot running. So, but that hurt us for a number of years because again, we kept them in there with such a high weighting. And again, we keep them in there. This is different from like talking to like traditional investors because they think, oh, they're in your portfolio, you must have a position in them. No,
Yeah.
we're just tracking them, and uh, they're historically we give them a higher weighting because they just present better diversification benefits than some of the other sectors. Like a bad one is bonds,
Mm.
especially in the last 10, 15 years. All bonds everywhere move together because all the central banks have the same ideas. They're all doing the
Yes.
same thing. So all the yield, or they go up and down on the same days, more or less. And that, so when we see that and we're like, okay, we don't want to have as big of a position there because they're not, it's not different. It's not different
Yeah.
enough intersector. So but commodities are. You got grains, you got meats, you got softs, you got energies, metals, and then you got newer markets coming online like China.
Yeah.
We haven't started trading them yet. We hope to soon, but they have a few dozen markets there that are just totally off the wall, different than everything, which is just incredible.
Very. Yeah.
So it's tough to get exposure to them right now because of regulations, but hopefully soon. Um, and then yeah, once we move from trading indexes to single name equities, we were able to jack up our allocation there too.
Hmm.
Why? Because they're different, It's like
Yeah.
same with the bonds. Like if bonds all of a sudden became different, we jack that up too and maybe take it from somewhere else. So um,
Interesting.
so we're always monitoring that. Things don't change day to day or even week, month to month, but over periods of time, longer periods of time, you can get these regime changes where things are just different and uh, more different markets, more different moving things, the better. That's all we're always trying to find.
Yeah, and I think that right. Speaking of regime change right now, like it's very interesting how cyclical the markets really are, and how uh, my uncle used to always talk about relative value. He's my great uncle, so he's very old, very experienced in this, and he would always talk about these huge cycle changes, and that's what he did. Once again, way longer term stuff than anybody I know. Like basically, like you're talking the '70s, he's in things like commodities, gold miners, and then he
Yep.
moves into the '80s, he's in stocks, and then like he was in the tech boom in the '90s. He gets out, he goes back to commodities again. He would talk about
Right.
these longer term cycles all the time. And to
Yeah.
me, it's kind of like we're running into that next phase, which is, once again, we're not predicting. But what it looks like, and what all of our, I know for you probably have we all kind of have similar models, seeing that
Mm.
most of the commodities for the last 10 years haven't been in this bullish trend. And right now, like, I
Yeah.
think I can think of two, that are the majors that are not in a bullish trend, and those are just neutral. Um,
Hmm.
and basically, like, seeing that, it's kind of like, man, this could be the beginning of the next type of commodity style cycle. So I agree with that. That could be
Definitely.
very interesting. um,
Definitely.
but the next one is, so speaking of getting into this next part of the cycle, especially right now, you're seeing, the Fed, it's transitory. This is going to be over soon. Every single person, I love reading Twitter because it's a great sentiment indicator. And everybody's talking about how there's no way the commodity cycle can go any further. And like, if anybody's ever studied history, how commodity cycles run. Like they can run a lot further than you'd ever dream of.
It's
And
it's just so funny now. You hear the same things that people were saying about equities 12 years ago.
yes,
When they bottomed out and then they started to, 2010, because everyone still was so scarred from that. And that is just another thing that uh, if you want to be a good investor, you need to get back in.
yeah,
You Okay, this one didn't work out. Fine. Get them the next time. But don't quit on it. Watch it, watch it, watch it. And then when she breaks out again, you get back in her.
yes.
And boom, let's see. And most people just are just too scarred. They just can't. Like, I don't know, I'm too. But what if what if we go down again? Like, but what if,
Yeah,
and like, well, yeah, I mean, that's why you have a stop loss.
yeah.
That's why you
At
don't
this
bet
point,
too
we're all in
much.
profit. Like we're all
Yeah,
heavily
yeah.
into profit, so it doesn't matter. And it's interesting that you say that because that's the whole thing that's been going on. Like energy traders, for example, like
Mm,
anybody who's looked at the energy market in the last like basically 6 years, they're just like I can't even like we basically put on this energy trade, and I think that was in November, and
yeah,
putting it on, everybody was like, oh, I can't even imagine putting that on right now because I had this happen and energy kicked me in the ass. And it's like, you
yeah,
really expected to get something right on the first or second try, and you're upset now that it didn't work. And like, it just
yeah.
it blows my mind because how it is. Like if you can't get over that and continue to put on the trades, I think Jerry's talked about that before, where he started working for the Turtles, and they were like, what do you think you did wrong? And he said, well, I didn't take all the trades. And
Right.
really, that's really what it really comes down to. Like you got to continue to put that on. You got to not care about that little loss. And you got to also do the risk management so you don't care about that loss. So that loss isn't killing you and scarring you, and that's
Yeah,
really important.
yeah. And I think that's the same. On the flip side, it's the same thing. I think I said it before about the winners. Is that yeah, you're never going to be the hero. You're never going to be the genius. If you do it this way, you bet small. That if you get one winner, uh, it's not going to make you a fortune,
Yeah,
either. So you need a lot of different small bets, a lot of different things, and then that aggregate you having an edge, you doing the proper thing across as many markets, equities as possible, without too much overlap, too much correlated overlap, you're going to be fine.
Yeah.
But people can't help it. They want to make a big bet, they want to make a bold call, they want to be Druckenmiller, they want to do that because they want to get it all over with really quickly, which I
Yes.
understand. I understand. We all want to make money,
Sounds great.
and get wealthy, and like that's the fastest way to do it. That's the
Yeah.
fastest way to get broke too.
Yes.
So,
And most of the time it
um,
ends up with getting broke.
yeah, because most things don't work out. So,
Yeah.
um, that's just fine. But people are. It's funny. I'm sure um, you can swap in equities or stocks into all these Twitter conversations where they have commodities now and say this is it's not gonna last. This is a what do they call it? A cyclical bull market. It's not a
Yes.
secular. What the fuck that means?
Yeah.
It's like this stupid things people say. I have no idea. Like we just went to the dictionary. Like these things make no sense.
No,
Um,
they don't. And they
they could be
constantly do
interpreted
that.
50 different ways. So, um, yeah, that's what it seems like now. It's just no, this is not gonna happen. And then everyone's gonna buy commodities in 4 years. You know
Yeah. And that'll be
and
the
then
time.
yeah, then we'll be getting out,
Yeah.
yeah. So that's what it seems like is going to happen. Now, hopefully, I should say, hopefully we get some good moves.
Yeah. And that's the other thing about it is like that's the other thing that I've always found really interesting is like I post sometimes on Twitter and I always get these comments back like basically this entire commodities move I've been posting commodities just talking about a little bit and I'll get these people who say you should be careful and like I mean literally this continued for like this is still going on. It's just kind of hilarious, like you should be careful, and it's like I want to just grab him in the face and scream at him like it's be careful betting against the trend all the fucking time, like
Yes.
don't do that because most of the time like it'll get a consolidation, they're like it's a top, that's it, it's over, every single time. And that's
Yeah.
not, historically, if you back test, if you do any of those things, you realize that is not the way it goes. It usually breaks into the way of the trend most of the time. So it's like, all these people continually betting on the wrong side of things all the time, which brings us to the next one I should ask you, which is why do you think it's so hard for people to stick with the trend when it's obvious that market, the one thing we do know is markets absolutely trend.
Because they're talking to themselves all day long about the story, the narrative, and
Mm.
that dominates. It's too hard to just turn it off and then just go with what is. It's just too difficult. It's because I think people are in it for maybe different reasons. They're not there to. They're too picky. I think they want to make money, but they want to make money their way. They want to make money. They want to have the narrative right. They want to have the market right. They want to, well, yeah, if stocks go up, fine, but I really want mine to go up.
Yeah.
Why are you so picky?
Yeah.
This is not, you're not in it's not a marriage contract. You could sell it and get to the better one.
Yeah.
If that's your, relative strength way, or, that's the way you trade, like, just go to a stronger one or something. But
Yes.
I think people just get so picky, and they want it all perfect. And and then uh, so then of course, like Twitter, just like media and just talking to people even before, the internet and social came around, people just um, talked at work or wherever else, on TV, on the phone, and
Yeah.
people's views influence yours. um, your desires become others because they're talking about, um, what they think the market's going to do or something. And yeah, no, it's
Always.
done well, but I don't, it's like, yeah, I think that too. Yeah. Yeah. Because I know who you're copying from. I know where you heard that,
Yeah.
because I heard four other people say it just like that. I know
Yeah.
exactly where you heard it from. So I think people just get that. It just seems to be like an innate trait of ours, is that we allow those narratives and and stories to cloud our view, cloud our, um, maybe to use like another sports analogies that, for baseball hitters, like just see the ball, hit the ball. People who are trying to like predict the pitch
Mhm.
and trying to like find every little, look at every stat, look at everything. It's like sometimes you need to just like just recognize the pitch and swing at it.
Yeah.
There's nothing else to really do.
Yeah.
They did it for 100 years. You
Mhm.
know, you know, these guys hit home runs 100 years ago.
Mhm.
400 feet. Um, they didn't need all this.
Yeah.
Sometimes you just gotta like keep it simple. And I think we just have a hard time not keeping it simple because we get bored. We have all these feelings that come up, that just we got to do something. We're
Yeah.
impatient. Again, it's like it's not the way we'd like it to be. Um, you know, that's what I don't know if that's a great answer, but it's just like again because I don't do it.
Mhm.
So and I'm not around a lot of people that do, and I
Mhm.
don't talk to a lot of people that do. So I don't really see, like in real time, face to face, people making mistakes. So I worked at like a probably like a prop shop or something where you could see a lot of traders. You could see, oh, this is the guys that who fall, who get fired,
Yeah.
who fail out of here. They kind of do this. They fall into that trap sometimes. So, but I think I just recognize that from like from Bear is it's a good company. It's a good company.
Yep.
And I've been saying recently on a lot of like LinkedIn posts and stuff, I'll say like the company doesn't equal the stock.
Yeah.
They're not the same. They're not the same.
No.
People think they are. And I'm like, what more evidence do you need than the two recent big ones? GameStop, AMC.
Yes.
They're not that. Like, they're not.
Dogecoin, like it's, I mean,
Dogecoin,
all of these things,
fucking cum rocket. Like, what the
Yeah.
fuck is like, what is the it?
It's
Do you
insane.
see like this should be the evidence? Like, do you see it doesn't need to reflect all the things you think it should reflect? Like, it's just doing what it's doing. And like, your job is to like hit it,
Well,
adapt to it.
you also kind of have an interesting background, which is that you didn't come from um, swinging at things stupidly. Like it seems like the way you told your story, it seemed like you kind of found these people who were doing it right, and you were like, man, this makes a lot of sense. So you kind
Yeah,
of went to that very early, where for me, even I did the don't. I mean, I learned trend following out of necessity, because it was like I was doing everything wrong. I was thinking
uh,
so much, and I thought you think you start to do things, you make some trades, you make a couple bucks, and you think you know everything. You're like, I know some
yeah,
shit, and then really the market loves to teach you that you don't know a fucking thing, and that you're completely powerless over market direction. And so,
hmm,
after a while, you start to find these. For me, I started to find these people that were like really doing it right. It's like, wow, you're sticking with these trend things, and like then you back test, and you once that's the thing to me why I harp on everybody about this all the time, which is back testing, not just reading about a back test, really doing it for yourself, because you
yeah,
start to really understand that, like what markets actually do compared to what you're going to read in a textbook, because markets in a textbook are not what's going to make you money, but really understanding what they did during certain times, certain time frames, regime changes, cycles,
yeah,
like all these things. If you understand that over time, you really gravitate towards like, hey, this is a great style of trading. And even like, even if it's not, if it's just you talk, the interesting one is that there's so many traders that always talk about trend following, and it like that they don't do it, but then at the same time they're talking about it as in, hey, you got to think about it like this, and you got to think, and like, even Druckenmiller talks about, at this point, when it breaks out, I'm going to pile on the trade, knowing that I'm right. I mean, all these
yeah,
people use tactics from trend following, so it's like it's
yeah,
really an important style of trading.
yeah. That's yeah, good point on like especially on Druckenmiller because
Mhm.
everyone just like just bows down to him.
Yeah.
Yeah, I want to copy him because he's a billionaire. It's like okay,
Yeah.
fine, but you know. I bet you if you modeled, you annotated, charts where he bought and sold things, and then you overlaid some like simple trend rules, they'd be very, very similar,
Yes.
very similar. And there might be a couple mistakes in there that maybe he bought a little too late. There
Hmm.
might be some good things where he bought low and it ended up being, things like that. But I bet you a majority of the signals would be very, very similar. And that's, again, it's like the narrative. We can't, unless we do that, we don't know what the hell he's talking about, you
Yes.
know, and then, we don't really know what he's doing, and he's not going to tell us, and he may not even be able to explain it.
Hmm.
So it's like, yeah, well, he's not a trend follower and he makes a ton of money. Yeah, but we, again, we can't prove that he isn't,
Yes.
because we're not going to be able to know. We
Yeah.
can't do the work. So um, this is like, as you get like experience and talk to more people, you're like, oh, okay, like, all right, you're kind of doing similar stuff. You just call it that. I call it this.
Hmm.
He doesn't use stop losses. Yeah, fucking bullshit. He doesn't use stop losses. He gets
Yeah.
out. Of course
Yeah.
he does.
He
You
gets
know,
out. He talks about
like,
it, like he
yeah,
talks
it's the
about how he's
only
cutting losses and stuff. So certainly he
the
gets
only,
out.
it's the only way he's survived and made a lot of money. Like,
Yeah.
not the only way, but a major reason why. So,
You
oh,
also
she
trick
went.
your brain,
Yeah,
you so trick your brain into saying that I have figured this out, I have done this, like it wasn't because if you talk to him, or sorry, not talk to him, but read his stuff or listen to him talk, you see that he does talk a lot about those like breakout zones and technical analysis and using the price and all of these things and like understanding like the sectors by using price action and all and trends and all and like he talks about all these things and then people and it might even be that he does think about himself in that way, but most people just gravitate towards the, oh yeah, be greedy like a pig, because it takes courage to be a pig. It's like no, like when if you're starting trading and you think that you're gonna lose a lot of fucking money, you're gonna lose
yeah,
your
no,
ass
no,
very
no,
quickly. You,
no,
you it's the opposite of that. Not to mention like people hear the numbers, they hear like he took this trade, it was in the billions, but they don't understand how big his fund might be. Like they don't
yeah,
understand where his loss point, where his cut point was. None of those things. Not to mention, he always talks about, well, when I take a big bet, I usually do it in the currency markets or futures because he can get out very easily. Like it's
yeah,
people don't understand all those aspects of it, so it's really important to grasp that.
yeah, and you know, um, obviously you listen to a guy like that and other guys like that, you tell they're very smart and they know what they're doing.
Mm.
But like him becoming a billionaire from a trade or two, like that's not, like, I don't know, to me it's like not very, I'd say, like, inspiring, because like, did you get lucky? If
Yeah.
you had that trade and you were just, you weren't working at Soros's fund, you were had your own little fund with 20 million or, whatever, and you make a decent living for yourself, but, great, you did well in that trade,
Mm-hmm.
but you're not a billionaire now.
Yeah.
It's like, I knew the same thing, but I'm not a billionaire. And how many of those are there? Probably a lot.
Yeah.
And not everyone can work at a huge, massive fund
Mm-hmm.
for whatever reason. Let's say he was like actually smart, but I bet you there's a lot of people who are just as qualified.
Mm-hmm.
So there's that too, where he can make a lot from an idea like that, whereas a lot of people cannot, because they're just not in that position to be managing that amount of money.
Yeah.
And we don't know how much he made from it. We don't know how much he made from another trade or two. And if he's swinging like that, then that's all you needed. And I'd say the rest of the time he's very, very, very conservative, so he doesn't really put himself at risk of losing a ton. You know,
Yeah.
so
And that's
um,
really that's to me, that's what I see from like, looking through his 13 apps, looking through everything. It's like he has this very conservative style, which is these certain stocks that are long, certain stocks that are short. And then once in a
yeah,
while he sees these special opportunities and goes big. And
sure,
that's not to me like that's perfectly lays out like a good risk management strategy, sometimes taking the big hit, but also cutting your losses quickly. Like it's nearly the same thing over and over again,
Yeah, and that's basically what we do.
Yeah.
Yeah, the same thing. We're just probably maybe a little bit delayed. Let's say he goes a little quicker because he sees it using other things, but maybe not. Maybe it might not be. But we're doing very similar things. We're most of the time, waiting around, and then it starts to tick in our favor or break out, and then we're piling in, and then we'll see. Then we see how it goes.
The one thing that I should ask you about is one thing that I think comes up in a lot of trend following style conversations that I seem to be having over the last few years, which is people think that if you are a trend follower, you are always long or always short, which is just to me, that's just asinine to even think that. But
No.
like people talk about maybe like, I don't use moving average strategies as any of mine really, but some people who do that, sure, they do a crossover strategy, long, short all the time, but that's also pretty rare. Could you explain, how you do a basic trend following strategy, just for like I obviously know, but just for the audience?
Yeah. If you want to use a couple of breakouts, couple of like channels, say you have a long-term one, let's say it's 200 days, then you have a shorter term one, say it's 50 days. So,
and these are downstream channels, price channels.
Yeah. Channels. Let's say, okay, so you have them. If you're just gonna try to imagine a chart, you overlay them on top. Say you're starting from a flat position, and then you get a breakout. It breaks above the 200-day high. Okay, now we're long for the first time, and then your 50-day low would be your exit, your long exit, and you just recalc that every day, and like it'll move with it. If it ends up being a good trend, it'll track with it. So you get out at some point, a good trend, and then you get out at that 50-day low. You're now flat, and now you still have a long-term uptrend, right? It hasn't made a 200-day low yet, so you're still in this long regime, but you're flat for now, because in the shorter term, it's down. So when that happens, 1 minus 1, okay, we're out. And then, when it starts to tick, if it ticks back up again, you'll just get back in, let's say like at the 50-day high. You're not going to wait for the 200, you're not going to wait for all-time highs or a much, much longer term high. Get back in and out with the 50. So you have your trend signal as the 200, and then your trading signals using the 50. And same thing on the short. At some point, it gets to a 200-day low. Now your 50-day highs are out, and then back in at the 50-day low, in and out, however it goes. So that's pretty like simple. You do that testing, and you'll see that does about as well as anything.
Yeah.
Which is hysterical.
Yeah, no,
because it's just so hard to do it, because you're going to buy oil not at negative this or 0 or 5. You're going to buy it at 50.
Yeah.
And you're like, oh my God, 50?
Yeah.
I'm not fucking doing this. This is just way too reckless. It's got to be overvalued by now. All right, here we go. That's 70.
Yeah. And that's exactly how it goes, and it's interesting because it's like when I first started the group, I was God, there were so many different interesting trades. But one good one was basically was that May. So yeah, we're in May to May 2020. And at that point, the market started to basically give the signal that we were going to go long again at that point. And, every single person was just angry, wait a minute, like, I'm going to buy this up here. We could have been buying down here and like all these things. And it's like, you don't understand. No, you didn't miss them. If we're going to continue, we didn't miss the move. And that move from that point was amazing. We're all the way back up to, we've probably doubled that move in the not double, but we've certainly hit where we're at 4,200 now in the S&P. Like we're flying up there, and that was all the way down there at 3,000. Like 3,500 maybe. So I don't know. I'm trying to think about it, but that's a perfect example of like you didn't miss the move. And most
Yeah.
of the time, if you backtest, you see that trade works out really well. But everybody in their head wants to get that bottom tick low, which will not, you can't do it consistently. And if you can't do it
No.
consistently, you can't do it again and again, which doesn't lead to good returns. So, if you're
No.
gonna try to buy a low, like especially like the COVID low, like what are you gonna do? Buy the whole way down? I mean, it looked like it hit support 50 times. Like you're just gonna continue to buy every single day, and then at a certain point, like, oh, I'm right. And like, but the thing is that they got lucky that time. That was the time they got very lucky where it did bounce all the way back up, and they're like, look how smart I am. But most of the time
Yeah.
that's not the case.
Now, if you took that system I just mentioned and reversed it, so at the 200-day high you sold it, and then you covered at the 50-day low, right? You're covering and you're flat, and then if it gets back to the 50-day high again, you short it again. Absolutely. And so if you reverse that system, how would you think that performs over time?
Terrible.
How would you think it performs?
Terrible.
Goes broke.
Yeah.
Goes broke. It goes if you have your your proportional position sizing, it can't theoretically go broke because it just goes asymptotically to zero over time. Yeah. But that's what it does. Because two things. One, you miss the big moves. The big moves, you're covering them quickly. And then the other one, you're not catching the ones because let's say it doesn't retrace enough for you to get in, right?
Yeah.
So it keeps going, right? So say oil breaks out and it doesn't retrace for you to buy it. Well, because you want to buy on the low. Well, the best moves don't retrace enough. So that's another huge problem. So you end up having a lot of small winners and a very few big losers, and then you miss a ton of outliers. So like that's the game. Yeah. That's the game. You can't win. You can't play if you don't get that.
Yes.
That's like what we're all trying to do is like find these outliers or say be in a position to profit from these outliers. I don't need to find it because I don't know which one's next, but I'm going to be on it. If it turns into an outlier, it's not going to be an outlier day one when the thing just breaks out. This could be like any other trade. Like, all right, it broke out. All right, let's see what happens. And it's an outlier in 2 years, or a year or something, so we won't know. But you got to be in a position to profit from those outliers. So yeah, that's like, and like to use another like very simple trend following system example, if you don't like to use, for your trend indicator, you want to use 200-day highs and lows, you want to use like a moving average, then same thing. You can use that when the shorter crosses above the longer term. And you can use either channels again for your entries and exits, or if you don't want to use the a different way to exit would be using like an ATR stop. Like ATR at entry is X, multiply it by 5, 6, at whatever, whatever you want, 3, 4, 5, whatever, and then when it makes new highs, recalc it. So it's always again tracking. It's similar idea. It's just always tracking it, but it's using ATR, not necessarily a channel, not necessarily a low or a high. So of the past X days. So very, very simple. But
and the simple works.
Either one you choose would do very well. It's I remember Sakota talking about, it's like, Donchian had this stupid thing, back in the 70s or 60s, whatever it was.
Yeah.
He's like, he's got this mechanical system that makes money and you don't do any work. Like, what is this? This can't be. Yeah. How could this be?
And it was a 20-day high, 20-day low.
Yeah. Back then it was different. It was a much shorter term than it probably should have been. A lot of the guys, a lot of those guys got away with shorter term systems that just worked for that period of time. But but the longer term stuff worked better back then too, which is a funny little secret that I remember telling Jerry about. I said, like, you guys got. I think you guys got away with one
Hmm.
in the turtle days because those systems were so dangerous.
Yeah.
I think Jerry talks about he lost 60% in one day once. Like one day,
Yeah.
like that's not, you can't run a business like that. You can run your own little account and
Yeah.
high octane, sure, but that's good luck with that. You're not gonna be able to follow that thing.
Yeah. I mean,
Yeah,
who
no,
would invest in that? But
nobody,
it's
nobody.
it's interesting. But yeah, it's interesting the way the trend systems work, because if you back test, like, I mean, I remember when I first started back testing, like a decade ago, and going through like making the most intricate systems I ever could. Like,
Hmm.
basically, you have all these filters and indicators and all these things, and you're like, all right, this will be the best. This one's going to make all the money. And you find out
Yeah,
that, like, years later, like, I have systems that are like two standard deviations up, two standard deviations down, like just ridiculously simple systems that work really, really well. And you're just, it's super surprising. Same with the Donchian channels, like 200-day highs. It's a very strong system.
yep,
All these things that are very simple, but once again, everybody wants to go towards whatever. It doesn't, simple sounds too easy. And why would I,
yeah. Well,
why would I learn
yeah,
so much and read so much if I'm going to do something so simple, is what
yeah.
gets into their head.
I think the tactics. It's just like a proper dieting and fitness. It's the same thing. Like people just still can't do it.
Hmm.
They still need like the marketing juice behind it to even like try something out. Like, oh, I got this new one. It's like uh uh I love the show on HBO. It's not on anymore, but Silicon Valley. It's like one of my favorite
Hmm.
comedy like little sitcoms. And he's like, there was one diet or one meal the guy ordered at a function. It was pescatarian. It
Hmm.
was fish who only eat other fish, and it was like, it's just so, but that's like what people do. They think they
Yeah.
need like a new thing, like, oh yeah, what's that? That's a new one. That must be, like, eat your vegetables. Don't eat too much.
Yeah.
Don't eat a lot of junk food. Okay.
Yeah. That's the basics.
It's like, get your exercise, get enough sleep, don't drink too much, don't do, get some sunlight, fresh air, like
Yeah.
the stuff that's always worked.
Yes.
That, what's complicated about that? Nothing. Well, then it must not work. No, 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 no. It
It does.
works. It
Yeah.
works. It works. But I understand why you may not want to do it because you actually have to do it.
Yeah.
That's what's annoying. You actually have to do it. You don't have to just bounce around and be like, oh, I'm doing work, I'm bouncing around, I'm trying stuff, I'm finding what works for me. Well, okay, you keep finding that. But I could tell you right now, it works for everybody. I understand there's marginal things. People are allergic to this, they bad reactions from that. Okay, fine. That's all marginal. Yeah.
Yeah.
The bulk of you're going to be fine
Yeah.
doing these five things. So um, that is where that's where all the best investors have in common. They all do the same things.
Mhm.
How they do it is all marginal. it's
Yeah.
it's all conversation, it's all bullshit marketing,
Hmm.
trying to position to raise money against these guys, shit like that.
I've always wondered
It's
how many possible trend followers are actually really out there, who are just systematic trend followers that write, hire guys to write for them, like fundamental guys. And they're like, okay, I have this, we're long these things. Why are we long? Write a story about it. I liked Peter Brand actually told an interesting story once, which was that he was in advertising at one point, and then he talked about how he got jobs when he started trading. He got jobs for hedging for McDonald's and advising them. And so
yeah.
he would, like, basically using technicals, be like, this is a short, this is a long, but he'd go ask people around, like, hey,
Hmm.
why, why am I long this? Why would I be short this? And they would tell him, and then he would write it to them. And basically, that's why he calls this thing factor, because they would call it the Brand bullshit factor. And so like because he wasn't, he was just taking what they were saying and just writing it down, being like here, but really it was just the charts for him. So it's like
Right.
I wonder how many people there are out there just like that, because that's the thing. It's hard to, even to this day, like I probably have only one guy I can talk to and be like, yeah, like you understand some things are long, some things are short. It's all based on price. Okay, can we talk about anything else now? And there's only one
Yeah.
person like that. Everybody else wants to really dig into why, where, when, how, when are we going to do. I mean, I had a person ask me, about, hey, do you think you're going to sell everything because it's going to be worth more next year? We'll pay the taxes. I was like, what? I was like that I was like, you have this predictive ability what next year looks like. I'm like, that's insane. I don't think anybody does, but okay. But yeah, like for especially the normal person who's going to invest with someone like you, what do you deal with and we'll end on this, is what do you deal with them trying to explain to them what you do? Are your most of your investors pretty just, hey, I know that you're a friend follower in the first place, or do they kind of grill you on the story of what you're doing?
Most now they're pretty good. Everyone's kind of, because I try to be very brash and like the way I talk now, with everybody. And I know there are people who are not interested in the markets, and for them, I'll just keep it ABCs. I think probably the most trouble I've had has been from older people,
Mm,
older guys who are already wealthy themselves,
mm,
and I think their personality just didn't really, like, their ideology. I
mm,
just say personality, like their ideology was not this.
mm,
They thought you had to be doing it differently, and I've learned at that time, probably when they left was probably like 4+ years ago, where I've gotten better at, like, all right, I recognize what he doesn't like, and
mm,
I'm going to, all right, explain it this way. Um, because rather than staying stubborn and say like, well, this is how we do it, going through like features and things that's like, I know what you're saying, I don't like this anymore.
yeah.
Or I say I like it when it wins, but I don't like it when it loses, and we've been losing for a bit, so I don't like this. It's like, yeah, okay, I guess I get it.
Mm,
Everyone will have their moment when they turn on their, any strategy
mm,
that's just not making money, for a longer, period of time than they'd like. But I think, I think mostly everyone's pretty good now,
mm,
because I just keep hammering those, like, it's like diet and fitness. I always
mm,
use analogies, metaphors, with explaining this stuff, because I understand it's not as fun for people. They just like, they just want like a safe place to put their money and
mm,
make a reasonable return, good return over time.
mm,
So,
yeah.
you know, but if you want to, like, find the people who are really picky, well, you got to maintain certain alpha every
Yeah.
24 months over the index. You have to have this, this, this. I'm like, well, chances are at some point we're not going to be all that. You know,
Yeah.
we might be a bunch of it,
Mm,
or a hand, or like a few things at a time. We're never going to be everything. There's just no way. And if
yes.
it does work out, like it did in '08, where trend followers, especially like, the CTA, managed futures industry, checked all the boxes: uncorrelated, crisis alpha,
Mm,
alpha, yada yada yada. Everyone was like, yes, this is it.
mm,
We want this. Of course, it was the top. You know,
yeah. That's how it
So like,
goes.
yeah, in those times, when we're everything, counterintuitive, we're probably going to be done for a bit. Probably going to
Mm,
go into a drawdown. Other things are going to outperform, but but like explaining the process, I've just gotten simpler and simpler. Brash is best.
mm,
Um,
I agree.
as far as I'm concerned, being from Jersey, New York,
Mm,
it's like, I don't, and just being this type of person, there's people here who are meek too, and like,
mm,
are nice, and I try not to be too nice.
mm,
It's like, hey, this is it. you know, we try to make money. We try to find big moves. We ride the big moves. We
Mm.
protect our ass a few different ways. Here's how we do it. Well, why would you trade so many other things other than equities? Aren't equities good enough? No.
No.
Here's why.
Yeah.
Here's why that's not.
Yeah.
I understand why you may think that recently,
Mm.
because things have been so great in equities, and you know, commodities had sucked for many, many years, and you're like, why do we have so much? Why do we care so much about commodities? Well, we should just go all in on equities. No,
Yeah.
because the trends are good. I'm like, yeah, but you know, this is not, you know, this too is dangerous.
Yes.
So I just try to use those things, like start from a place that they already know, like index funds, fundamental, you know, Buffett type of, you know, that's the Wall Street marketing machine has
Mm.
just drilled those ideologies into people's heads from a very, very young age. So
Yeah.
it's a, you know, here's what you know about these, here's what we do, here's how we're different than that.
Mm.
And then you can kind of like, oh, okay. But if you start with like the complex stuff and not trying to use any context for them, that's just forget it. You know, they won't understand. They won't even listen. So that's why they
Yeah.
won't understand, because they're not even listening. So
Yeah.
I've had a few of those conversations where I've tried to been like, you know, flex all my expertise, and you know, your ideology's stupid, and you
Yeah.
know, I don't know what you guys are doing, buy and hold, like
Yeah.
morons. Why would you do that? You're not on a good foot.
No.
You're not off to a good start with them. So start where they are, and then you like, here's how we try to improve upon it. And then people are
Yeah.
like, oh, okay, that sounds good. So, and then if the returns are good, then they'll stick around. And
Yeah.
yeah, a lot of the like older trend followers, even guys like Jerry, you look at like their holding periods, like long term,
Mm.
24 24 months, you know, up to 60 months. Like,
Mm.
how many of those holding periods are they positive?
Mm.
What's the average return in those holding periods? What's the average when they do lose? What's the average losing period? Like
Mm.
stuff like that. You get to like, I don't care what this is, I'm investing.
Yeah.
This is damn good.
Yeah.
Like wait, so you guys trade trends? You guys are like little different, little odd? I don't care. You know, at that point, I don't care. You know, you guys are doing something. You guys are doing something right. So
You're right.
that's yeah.
You deal with that so much in the business, where it's like, you know, but also there's the other end of it, which is like the second. It depends on, and the one thing that there's a good thing about the older guys, which is that most of them have that idea that like it's not going to come overnight. Every month's not going to be a winner. And but there's also bad things about that as well. But the other, not that part of it, but older guys and certain who've already made it, that you already went over. But
Yeah.
it's very interesting that you get into all these periods with trading, and basically when you're talking to these people and you're explaining this thing called trend following, and they think it's like every month's going to be a good return, you're using all the diversification. And I've run into so many people, especially new traders, who are like, I want to make returns every month. And
Mm.
and like they all gravitate towards different strategies because of it. We had one guy who was doing like literally like one ATR scalps. He was like, "Oh, this is going to work great." I was like, "That sounds terrible, but have fun
Yeah.
with that." And then, you
Yeah.
know, another guy's like, "I'm gonna just sell options." I was like, "Well, that ends up in an explosion every single time. So have fun with that." You know, like it's like everybody, when they start trading, they want this holy grail. And
Yeah.
so it's like for us, you know, it's to the situation of knowing like you're gonna have these losing months, you're gonna have these possibly losing years and all these things, but overall, you're going to make money over
Yeah.
time. You got to stick with the strategy, stick with the plan. So yeah,
Yeah.
that's good advice.
It's an unrealistic ideal. And like, I appreciate people who are idealistic, and I try to stay in that mode too. Um, but you know, you have to also respect facts and data too. You know, like, sure, like I wish we had the perfect solar panel that soaked up the sun on from one day. It could be cloudy the rest of the year. All it needs is, or it could even suck energy through the clouds. Doesn't even need direct sun exposure. And you know what? Yeah, we wouldn't have to go to the stupid gas station every once in a while where our tank went down. But like, you know what? That's not how it is now. They haven't figured it out yet. And like you want to get rid of oil and like save the planet, save the this and that. Like, and I understand there's some greedy practices out there. Like, like I told you maybe before you started recording, like we went to Africa. Yeah. And these stupid ass poachers, cut rhino tusks off, the horns off, and they'll grow back. But the one problem is these idiots get too greedy and they cut too low. So they want to get the whole horn. If they cut half of it or cut 3/4, they'd be fine. It would grow back after a while and they'd get another one. But no, they get greedy and they cut the whole thing and they cut an artery in the nose and it bleeds out and it's dead. That's fine. And you're like, you fucking idiots. Why? You could have more of a business. And like, oh, you're worried about more supply? Okay, well, throw some out. Don't release. Have you learned anything from the diamond business? These guys hoard it. They hoard it to control supply or something. But don't kill your business by killing the animal. So it's like similar thing with like, ideology in trading. It's like, I know this is how you want it to be, but you're going to kill yourself by doing something stupid, by getting greedy because you want it to be that way. Like that's not how it is. I'm sorry. I wish it was too. Make my life easier too. You think I want to fucking buy breakouts and like have 60% losing trades? Like that's not fun. But that's the way it is. And I'm not Renaissance. I'm not. And then, you know what? And I have a moral background too. I have a moral fiber too. Like I'm not going to use inside information. I'll bow down to anyone who uses inside information. They're going to beat everybody. But I'm not risking going to jail and have my life, ruined just to make some money. No, like come on.
There's an interesting other side of that on the insider information. I had a friend who, he wanted to hit me up about something and he was like, hey, like he tried to make it real secretive. He goes, I have this information. It was something about the FDA or something. And I was like, you just don't. I said, number one, like you have no idea what the market's going to say to that. Like the market might think that's stupid. And it might not do anything. It could go the opposite direction. It might discount the news. You have no idea. So that's the one thing that's always interesting about the insider information because, sure, sometimes it's going to work out really well. But most of the time, if the market, if the market is in a primary trend, it will continue the trend. The manipulation of a day or two isn't going to change the trend. So, at the worst, if you're in a downtrend and you get some great news that they have insider information on, you might get a bump, but that's going to continue right to the downtrend right after that. So
resiliency. When you see resiliency, that's typically a good sign. But those are good signs. That's like a characteristic of a good trend. That's typically what you see. You see, in uptrends, you see sell-offs bought hard. Fairly quickly, back to highs pretty quickly. They don't stay down, type thing. So, the ideology, it helps, I think, and I think it helped the older guys, like the risk takers, guys who are like, pioneers and stuff, where there's going to be a few losses, there's going to be a few casualties and deaths, but this is all for a good cause. And we're going to learn something here. And that, that's great. But I'm not the person that's going to do that and die. Heroes, there's reward in being a hero, but you tend to die. So I don't want to die. I don't want to die. I'd like to be alive and, live a reasonable, successful life without getting too crazy. I understand not everyone's into that, and we need the young kids, people like that to take those risks and stuff. But but we know the answer about the one ATR trading. This isn't
Yeah.
it. Move on to another one.
Yes. Yeah.
Yeah, we figured out it doesn't work. Let's go to another one.
It was funny because, you know, and he just was learning how to trade, you know, and
Yeah.
he was just trying to like understand things, but he would argue with me about it and be like, dude, that's not going to work. Or he would talk about like trading something like palladium, basically with like a really close stop, the same stop as there. And I'm like, dude, that is the most volatile. That is probably one of the most volatile, huge contracts you can trade. So
yes,
it's
very dangerous,
yes.
very dangerous.
So you cannot have a very tight stop on it. You know, like you have to have a big account to even trade it. You're not going to go in there and use a very close stop and just kick ass. Like it's never going to happen. And so, you know, he would argue with me about these points. And then like basically it was probably like 2 or 3 weeks ago. He was like, yeah, I've been running that strategy for a while now. I'm negative. Like, yeah, I could have said that, you know, like maybe the win rate, it does, because the win rate is high. It doesn't mean that you're going to make a lot of money. That's the one biggest misconception that happens is like people, it's the same with a basketball player. Like they're throwing up shots. They're not throwing up 100%. There's no team that's ever thrown up 180%, you know, like that's nearly impossible. Even free throws, nobody does that free throw wise. But you see that in trading all the time where people think they're going to get in and be the one that does that 80%, 90%. And you know, the only strategy that you can do that with, like, sure, there is a strategy you could do that with, which is selling out of the money options, way out of the money. But once again, like, how many blowups have you heard of? I mean, there was just a guy, a trader friend of mine, works at a prop shop, who was buying those out of the money calls on GameStop when they were when it was just flying up. And he was like, there's no way. And he hits me up and I'm like, dude, it just broke out. Like it straight up just broke out. I wouldn't touch that. And so I mean, this was all the way down there. It hit 500. I think it was around 100 or $200. And so he just held on through it. And then once it hit expiration, he was screwed, you know, blew up all of his entire account, you know. And it's like, it's that has happened so many times. I can't believe people still argue about that strategy. like, you know, you talk about all of those hedge fund, like option sellers was the last great one. Have you ever heard of that one?
Option? No.
It was a fund called Option Sellers. It was a website. If you ever get bored, look up optionsellers.com. And the guy basically puts out a video apologizing like to all of his clients. Like he made it public. Like it was really it's you don't want to watch the whole thing because it's just rough. But basically his strategy was selling out of the money calls on natural gas, selling out of the money puts on crude oil. And if you remember 2018, they both mean reverted. You know, like there was
that because of the fires? Were there fires at that point?
I can't remember exactly what it was, but basically, like natural gas had a ton. Everybody was short natural gas because it was in a downtrend forever. And then oil basically like went from, I think it was around $80, 75, something around that point in 2018, and it just went like this, and natural gas went like this, and he lost everything. Like within days, like, you know, like everything went bankrupt. And then
and you know, that's a huge problem with huge positions, is that you can't even let things fluctuate normally, because a normal fluctuation, you know, for us is like whatever, you know, it's not going to get us bounced out. But if you have a huge position, you almost have to be shorter term, because you got to watch these things. You got to just have it on a tighter leash, because obviously it blow you up in 3 days, like a few days. Like what? You know, that's just way too risky.
And that's the thing with the out of the money calls, you know, like, or out of the money puts, is that, like, you know, the premiums can jump so quickly and you're just screwed. And like, you know, I've talked to people about it a million times. It's one of those things where it's like everybody's like, I got to try it to do it. And it's like, for me, like, I will probably sell an option naked once every 3 years. You know, the ultimate situation would have to pop up. And that's the thing that most of them don't understand, is that you just it's always a situation, because that's the thing that's scary, is like you're going to continue to sell that as it's coming against you. You can't even get out of it, because literally you wake up like those put options or call options on the overnight market. in something like natural gas or crude, like you're fucked. There's
Oh
no
yeah.
liquidity. If you were a big fund, or not even big, medium-sized fund, you're screwed. So he had to
Yeah.
get stuck with it, like over the night, jumping, and then he probably did the hoping, it's going to come back at some point, and it just didn't.
One more day, one more day.
Yeah,
This can't last. All
yeah,
that stuff. All
just
those,
crushed.
there's like a Rolodex of few sayings that if you say these things to yourself, then get the hell out of whatever position you have,
Yes.
because this is not a good sign.
No,
Yeah,
not at
it's a
all.
death sentence. People have said that before and they've died.
Yeah.
Yeah.
And you hear it. And that's the thing that I think you start to really like years in trading, you start to understand that about yourself. Like I have tons of times where I'm like, I gotta fade myself at this point, because you really start to do that at a certain point, because you can't. That's that situation, the things you say in your head, the things you'll say out loud, like you can start to figure out like when you should stop trading, when you should be doing certain things based on your actions. Like I have a phrase where, like, if I say I need a break but I can't take a break, if I
Hmm.
say that, I just
Okay.
I just walk away. Like I'm like,
Yeah.
we got to go on a trip. We got to do something, because
Yeah.
I'm ready to do something stupid. I'll probably go off my plan, do something idiotic at that point. So
Yeah. That's where like the fantasy hockey helps us. We're focused on other things than watching the markets all the time, or more than we should, because
yes,
we'll just start to get antsy. If we look at our open profits now, we'll just start getting the shakes because we have tons of open profits riding all these commodity moves and other things. And like, you get like days like today where a lot of things are like reversing a bit,
yeah,
from their, like from highs that they made like 2 or 3 days ago. But
yeah,
it's just like, this is not the right thing to do. I
hmm,
understand we could again be a hero and trade ourselves, and make the right decision. Like, I don't know, and I have done it a couple times. Like, I used actually one in Palladium. It was a few years ago, and yeah, a client of mine who just is not even in the markets sent me something about Palladium, and it was when Palladium was going nutty,
yeah,
and I said, oh boy, you know uh, this isn't good. Things like that where you get extreme sentiment.
hmm,
Um, and same with Bitcoin. Recently saw it. Maybe lumber recently too. Everyone's talking about lumber,
yeah,
and then of course it takes its big dip, and it's been reversing, over the past month or so. So like, yeah, there are those times. Yes, yes, but I think if you watch it too much, you're going to hear it that much. And especially now with social media, now, like, of course, oh, more people talk about lumber. Well, yeah, more people can talk about lumber because you're not just like around the people in your office anymore. Now you're
yeah,
around everybody. So you need to like figure out if, well, how normally do people talk about lumber now,
hmm,
like, so it gets a little more harder to handle. But yeah, there are times where you can fade it, and when the sentiment is so high, you fade that sentiment.
yeah,
um but I don't think you can really make a living on it, because so you can't really make a great living because it requires you to miss moves. Like,
hmm,
let's say if that's the only thing you did, you would miss moves and only get the little turn.
hmm,
And like, all right, so you got to wait. How long you have to wait in between these big ass moves then before the turn occurs? And then people will naturally do what? They'll look at like big ones like lumber, where it went up for months and months, and then it's
yeah,
gone down for a month. And then what they're gonna do? They're gonna go, well, let's look at stuff that's gone up for hours and hours,
yeah,
and then minutes and minutes, and like that's over.
yeah,
That's no. We're talking about like collective societal sentiment here.
hmm,
Um, things like that have totally gone. But I do think it's still like not a great practice.
yeah.
And
If
It doesn't really.
you can probably, and that's the one thing that I have really been trying to work on a lot over the last couple years is trying to figure out how to grab sentiment in a way that I can systematize. And that's really
Hard.
hard
Yeah.
because
Yeah.
of all of the different, like, not to mention sentiment indicators change all the time, like put call ratio. Like, I used to use it a lot. It doesn't do
Hmm.
shit anymore. Like it's a
Yeah.
joke. So they changed so much. So it's like, what can you use? For me, I've even found sentiment indicator using the curve. The yield curve is actually
Mm.
kind of the one that I can go to every day and understand and even see the points where it's going to work out. So it's like, it's interesting because you can find it in so many ways, or finding, defensive sectors compared to offensive sectors or high beta sectors, whatever. There's
Yeah.
some things like that you can kind of quantify, but once again, it's tough. It's a tough one.
Yeah. I think the more it's not probably not as fun for a lot of people. The more you stay away from like the art, like the investing art
Mm-hmm.
kind of practice, and get more like rules based, like hard data, price and stuff like that.
Mm-hmm.
Um, that's probably where you want to be. But I wouldn't say like, oh no, don't bother with this, because you might be able to
Mm-hmm.
find something that I can't, or but yeah, sentiment is like, yeah, one of those things where you're just like, I got a hunch that this does, people now, everyone's talking about lumber. Now they're talking about lumber. Like, I've been in lumber for 6 months.
Yeah.
Like, why weren't you talking about it? Oh, I know, because it's going straight up now. It's gone parabolic now.
And
All right.
nobody trades it,
It's,
by the way.
yeah,
Yeah.
yeah. And now it's, could now be a good time to like take some profits off. Yeah, yeah, yeah. But you have to like try to, at least for me, like stay away from doing this too often. Now, not looking too hard.
Yeah.
You kind of just want to keep sitting back and like let it all come to you. When it comes to you, sitting back away from the crowd and the conversation,
Mm-hmm.
that I think will give you like better indicator on what's real and what's not, what you're not just like making up just
Yeah.
because you want to see something, you want to find something. So
No,
um,
that's a good point, because it's,
yeah,
for me, if I can't do it back testing, what if I can back test it and it works, it's great. It can do well. I can put it in some form of method that I can continue to use again and again. But if I can't do that, it's worthless. And also the point on letting it come to you, because that's the thing. Yeah, I could search up, any trade I'm in right now and figure out a million reasons not to be long. Like everybody could do that, but
yeah,
sometimes it's like that's just the worst thing you can do. You're going to flush yourself out of good positions constantly. And I think that's
yeah.
what happens to most traders, is that they get into something and they doubt. I mean, I have a friend who, phenomenal trader, would come up with these phenomenal ideas. Like, he was fundamental, but he was really good. And he would
Yep.
get into these, and I would say, okay, I'm in it now because of, basically the trends change. And by the
Hmm.
time the trends change, he's like, oh, well, I think for these reasons, I'm going to get rid of the trade. Just letting you know, blah, blah, blah. And for me, I'm sitting there like, this is just starting. And it usually would. But
Yeah,
it was like he was so smart that he would talk himself out of things constantly, and
yeah,
that's the important part, is that you can absolutely talk yourself out of good positions.
definitely, definitely. But yeah, it's just tough for most people to do if they just don't have a foundation of, this is what this is what my strategy is.
Mm-hmm.
They know, either they have coded rules, or they don't, but they can write them out in English.
Mm-hmm.
They have a pretty good idea of what they do. They just like, you know, um, one of my favorite players ever, LT,
Mm-hmm.
Giants fan growing up. LT, he's like, most people need a technique to be in the league. They need to do their perfect technique, stay in the league, get good. It's like, I was just not that. Like,
Mm-hmm.
I had technique, but I couldn't tell you what I was going to do,
Yeah.
because he couldn't explain it. Couldn't, he was too intuitive, and like, you know, there's a reason like no one's LT.
Mm.
Like no one has been him since, because well, he's just too good. Like he's, probably like some traders that are just like, they're just beyond. Like Sakota might be that. He might just be a genius. And yeah, he says he uses rules, but he says he doesn't either sometimes. So like, when does he choose and when does he not? I don't know. Like he just might be just beyond us. Like, he just has it, and some of us don't.
Yeah.
I don't know that there's like a skill, there's a drill you can do to improve it. Like it just might be a thing, how he's
Mhm.
wired. Same with like competitive juices. Like
Yeah.
I don't know. I got you either to have it or you don't. I don't know. I don't know what to
Mhm.
tell you. I can't make you the way I am when I lose. I
Yeah.
I I can't. Um, so like yeah, I just but yeah, I think if you don't have a foundation, like all those guys have foundations,
Mhm.
and then they're so good at their foundation that they try to do their artwork on
Yeah.
top of it. But like Picasso was a good painter. He had real good technique and skills, but what he was going to draw and what the like who I don't know, whatever comes to him, however it all works out for him,
Yeah.
that's a manifests. But um, get the techniques down, get the foundation down, and then
Mhm.
get experimental, then
Mhm.
get weird.
No, I agree.
Um,
It's
yeah,
it's interesting that the one thing that I think is always the most important thing that not many people, especially at the beginning, nobody does this, is just to understand what a trend is. Like what do you say is bullish? What do you mean is bearish? Like, and if you
yeah,
don't have that, you're screwed. Like there's nothing in between that. Like if you want to sit there and go, hey, like even like I even tell people, even if it's as simple, and I don't recommend this, but even if it's as simple as a 200-day moving average, you know,
sure.
that's at the very least you have some foundation, some way of saying this is this. And then you can go a
Hmm.
little bit further, add something that says when you get out, or like what you or I use, which is downstream channels, like when do we buy these breakouts, when don't we buy these breakouts, like
Yeah,
little things like that will take you so far in trading. So, but yeah, that was great. Let's end there. I think that was a good
cool.
point. And thank you so much for your time, Mike. Much appreciated.
Yeah, no problem. It's great chatting with you
Yeah, it was a lot of fun, man. You take it easy.
too. Do it again.